JB here. Hope I was doing an outstanding Thursday, March 20th, 327. Really quick rant, talk to the market, some names I'm looking at go from there. S&P, a roller coaster day. Mo Seems different than most sessions we've had over the last couple of weeks, where the market has kind of picked a direction and ran with it. Today, started lower. Well, actually, overnight, futures were looking great. Reversed at about 4:30 in the morning. Quick, big drop from 567. Actually, I think it was 569, all the way down to 563. And then we were chopping around in the morning before the open, and boom, right out of the gate, we ramp. They say take the stairs up and the elevator down. Today we took the elevator up, and then it seems like we've been taking the stairs down. So then at 10:30 we hit highs. Markets at the 200-day moving average for the third day in a row, or well, third day out of four this week. And I wouldn't say Monday we got to 569. We didn't get to 570 and change, but you look at the charts, pretty darn close, and then reversed. And it's just been kind of like a slow melt. It's like an ice cube on a hot summer day. Oh, not seeing any change here into the close. 32 minutes left. I would love to see at least 563 hold if things do get a little suspect, right? So if there is some selling pressure, 563 holds. And then, Monday and Fridays have not been the best market days. So maybe we can reverse that trend tomorrow, at least get some support into the weekend. And I think PCE data is tomorrow. And I was talking about on the rant this morning, the hard data is probably going to be more important. Funny, I've been talking about the uncertainty word for the last couple of weeks, and sure enough, now it's starting to pop up on headlines. People putting the recession words. I mean, I don't want to sit here and say recession just yet. Obviously, the GDP now from Atlanta is saying, hey, we're going to at least have the first quarter is going to be negative. So back to back, technically, next Friday. Thank you. So, yeah, so hopefully, um, we get some kind of certainty with the data. So PC data is next Friday. Let's take a look at the amount of stocks trading over their 200-day moving average. Nothing crazy here. Little blip. I think two companies dropped below it. No big deal. And then you look at the VIX, and S&P is down about 0.5% here, and the VIX is flat, and it's right at 20. So I would just you would think it's just like a normal day, but huge trading range, solidly green to solidly red, and I just want to see that 563 hold. So that's kind of that. And then just some other things. So, as the talk heats up around recessions and bear markets and bull markets, I forget who this was. I think it was Riholtz. I forget what his first name is. He followed on Twitter for many years now, but he posted this. I guess this is from Deutsche Bank, kind of showing what happens when there is a correction, how many corrections go to bear markets, and then is there a recession before or previous 12, within the 12, or no recession at all. And if there's a trend and you look at it, the biggest drop recession started in 12 months, and then the next four, well, actually six in the next seven are events that happened within the next 12 months, right? So not in a recession, but happened in the next 12 months. So, not ruling out a recession, but if it is, the market's probably going to start pricing it in way before the data comes out. But we'll have to see. The other thing is trying to find some bounces. So some of these names have been so beaten up, you kind of want to look and say, wow, this looks great for bounce plays, for long-term calls, but it's tough to know what might happen in the next 3 to 6 months. We might have more. This might just be consolidation for the next leg to the downside, right? So it's tough to kind of wrap my head around getting long-term positions. And then the other part is, it's like if the data finally starts to show that, hey, the uncertainty's not going to be there, the economy is going to do great, it might even do better than expectations. By the time the data comes out to fully back that, the market's probably be way, you're already pricing that in. So, I'm not going to sit here and say I'm not open to buying later day strikes, but I might be a little more patient, at least for maybe into April, where I might get a little more convicted in some names. And then that Ryan Dietrich chart this morning showing, historically speaking, over the last whatever it was 18, 19 years, the bottom's kind of in March, and then we start to gallop. So all right, those are other things. And nice little chart too. I always love charts here. It's from Seeking Alpha, just showing the amount of stocks, the top 15 S&P companies and their buybacks, and showing that the buybacks are actually increased on a year-over-year basis, quarter-over-quarter basis, excuse me. I think I penned a piece back in 2014 around the markets, and back then the market was a heck of a lot more certain. We were just, I wouldn't say we were coming off the Great Recession, but people were still Still didn't think that we were out of the woods yet, and we had to. It was Project Twist and all these things that Ben Bernanke was doing. 2013 was crazy. China markets were crazy. So needless to say, amidst that, you have to kind of figure out how you can be convicted on the long side, or at least have a bull case. So back then, I wrote a piece. I'll have to go find it. I don't have time to talking around. I probably should talk about today, but one of the factors there was the amount of liquidity in the market, right? I mean, it's supply and demand. So if you have less supply and you have the same amount of demand, the stock should go up, right? If you have more demand and less supply, the stock should go up. If you have more supply and less demand, stocks should go down. If you have more supply and equal to, so the point is, even if we just have the same amount of buys every day with the, I talk about the funds, the hedge funds, the passive investing, active investing, all that fun stuff. If the amount of stock that's outstanding, total available, declines, and that happens as a function of stock buybacks, that happens as a function of M&As, delistings, all that fun stuff, you would, the market should almost just melt higher, right? So that's some of it. If you look over the years, and I forget the chart, there used to be like 7,000 companies on the Russell index, whatever, and that's down to like 4,000. This is like, have to get the new updated data, but the amount of stock trading available out there has decreased just as a function of stock buybacks and M&As, and there hasn't been enough IPOs to replace that. And rants for other days. So, at some point we'll find a bounce and hopefully find some support. But again, I'm open to both sides here until we get either some data or the market that really starts to find footing. Using my support resistance, so 563 on the SPY, 552 if we do get some weakness, and then I fear 540 will come quick. On the flip side, that 571 looks like solid resistance. So maybe tomorrow we get another chance to break over that. And of course, PDD is heading to 130 as I'm on here. So, all right. So just individual names to DELL, reverse the morning. It was great. 100 bucks in the pre-market at 4:30 a.m. Then pulled back with that pull with the market, sprang right out of the gate at the open. It was sitting right there, 101.42 it hit. And my calls, which I got yesterday, they were actually a little bit more priced than they were at 98 bucks yesterday. So as it started to dip, I didn't want to lose the profit, so I locked the rest in. Um, Even though all I need is a 2%, well, I need probably a 3% move to make some nice coin on it. But I'll revisit. So thankful at least get out of that one. And you start looking 107 and changes that gap fill on DELL. So if the market does find footing tomorrow and maybe DELL gets back over 100 bucks, maybe I'll look for some strikes into next week. Here's Shopify. Another name was looking great in the pre-market dip, then reversed, and then it was in the green very quick in the morning, all the way up to 104 and change. Similarly, my calls were actually red, even though the stock was up like 2.5%. Can't rule out a huge move. Shop has had some large outside moves on especially on Fridays, so wouldn't rule that out. But a name I'll continue to visit for some bounce plays. I think it's way oversold. Great earnings back in the middle of February, and some of it I guess is the Canada U.S. tariff tiff or whatever you want to call it. But I think that's somewhat unwarranted for its valuation. I think it heads higher soon, so I might look for some strikes there. Other names, Baidu just disappointed the last two sessions. I was hoping it was going to hold 95.75. It didn't. It's down here at 94. It looked like it was going to bounce earlier. Maybe tomorrow I'll look for some strikes into next week. Again, I don't think this China story is over. Just some, I mean, I wouldn't call it profit taking, but repositioning. Intel back at the 200-day moving average there, 23.81. Another, I'm not going to add more strikes here, but all things considered, if it's almost flat here. So it means it's pretty much almost green, still almost flat or green on the week, which is impressive. But it's been volatile, probably continues to be. But I still think 28 and change it heads to. TripAdvisor, I think it's a 1, 2, 3. That one's stair stepping. And when I talked about the SPY and wanting it to stair step, this is kind of what I'm talking about. When we have the dips and then it just starts. You have your red days, but your stair step, you're still going up, right? Even though you have steps, the steps are still heading up. So. At some point I'll add some strikes, but it's similar. I was just saying, I want to get convicted that the market's going to head back and we're going to be back over 600 on the SPY. I'm just not at that point yet. So until that happens, I'll probably be less apt to add some later dated strike names. That's Trip. And then last but not least, and I don't know, I have the chart up here, but PDD, it's a name I've wanted to add for years or a long time. That one got sold off back with the UPS situation and the $800 exemption, whatever that was, which got nixed and then back. So that was all the way down to the teens. Then it bounced. That it had earnings this morning. I'm watching. I'm like, these are good earnings, but I'm still selling off. that start to bounce. It's not a name I've traded before, so I wanted to wait. Got stuck there at 130. It looked like someone had a huge block at 130, like they were just waiting there to unload. And once that block cleared, it boom, it hit, it jumped $1.52 in a matter of like a second. I was looking, they got close to, well, they were up like 50% just a little while ago. Now they're somewhat flat. Oh, actually, they're in the red now. I'll just hold those into tomorrow. Some of these earnings names, when you have reactions like that, where it goes from lows to and then melts for the rest of the day to the upside, it's like maybe it's going to be the earnings are mispriced and people are just trying to, get positioned for it. And you have analysts out today. Citigroup just raised their price target to 150. Let's see, to 150 from 125. Jeffries kept it at a buy, $156 price target. And then you have Tiger, US Tiger Securities. They just uh, cut it to hold from buy. Not a name I haven't traded before, but you look at the chart and I'm like, wow, I think this thing's headed into the high 130s, if not higher tomorrow. And then, I was possibly looking for strikes in the next week, but for now, I'll just hold on to those. And that's about it, folks. We'll see what happens tomorrow. Hopefully, find some footing, end the week on a positive note. That would be great. SPY holds 563 into the close. I think there's a good probability there. And that's that, folks. Have a great day. I'll be back. Rock and roll.